What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw a very bullish day with high volume buying and we've now successfully survived FOMC. And once more we've successfully completed another bear trap. Right now it looks like all-time highs are right around the corner and it still looks like we're going to see that Santa Claus rally. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart. See what's going on in the stock market today. Alright, so today on SPY we can see that we were up 1.56% and we had a very bullish day and we did go up on increasing volume. So FOMC is out of the way and the bulls were out there buying the dip and we successfully completed that bear trap below support at 462. Remember, this was to be expected because we had the full bull trend on SPY as of 2 days ago, and when you have the full bull trend and price action is sitting above support, there's no reason to get bearish. So when we see people getting bearish and we see a bull market, it's more often than not just going to end up being a bear trap and we're just going to use those shorts as more fuel to the fire to get a very impulsive move. That's what we saw today and we're very close to getting back up to a brand new all-time high. Remember that the second close above 470 should be a quick trip to 477, and that doesn't mean we're just going to go straight there without any volatility and any pullbacks. Just make sure we're staying above critical support, which is now down here still right around 464, and make sure we're holding on to this full bull trend. If we go into the rest of the year holding a full bull trend, it is almost a guarantee you're going to see the Santa Claus rally. The only way you're not going to see a Santa Claus rally is if we start breaking down below 464 and 462, because that means this was all just a fake out to the upside and this was all just a bull trap, even though I think that's very unlikely because we're in such a strong macro level bull market and now we have the bull trend back on the daily chart as well. But as I always tell you, you should remain flexible and you should be prepared for any scenario. So if you see price action staying above 464, holding on to this bull trend, you want to stay bullish. And if you see price action slicing back down through 464, then you want to get a lot more cautious because there could be something going on. There's really not too much else to say because right now this market is getting very simple to follow and we're in such a strong bull trend that the price action should continue to push higher. Look for that next price target above at 477 and continue to watch critical support at 464. Jumping over to the NASDAQ 100 triple Qs, you can see we also had a very high volume bullish day today, going up 2.28%, and the price action did close back above all the moving averages. Remember, the triple Qs don't have the full bull trend just yet, but it's more than likely because the triple Qs are just lagging behind and we will see that full bull trend very soon. Critical support on the triple Qs is right here at 395, and below that we still have that strong support level that is holding up at 387. Below 387 you're getting a lot more cautious because at this point we did not break down and form a lower low at 383. If we start breaking below 387, you will want to watch that very strong support at 383. I think it's very unlikely we go back down there with such bullish price action, but as I always tell you, be prepared for any scenario. I think the highest probability chance on the triple Qs is to stay above 395 and continue to break out. We'll regain the full bull trend. We should see a price action breakout above 400 and we should start running to new all-time highs at 410 and 415. That's your Santa Claus rally and that's the highest probability chance that I'm giving the triple Qs to finish out the rest of the year. Like I always tell you, follow price action and trend and you'll be on the right side of the trade 9 times out of 10, and right now it looks like the bulls are in full control. Jumping over to the Dow Jones, you can see that we also had high volume buying, basically over double the volume we had yesterday on a very bullish day and a very bullish candle, breaking back out above 359, going up over 1% and closing back above all the moving averages. So the Dow Jones is still on a very strong bull trend, and at this point it looks like we're going back up to 365. On a breakout above that price target, we'll more than likely see a brand new all-time high right around 372. As long as the Dow Jones is staying above about 354, you want to stay on the bull. And if we start breaking down below 354, you want to get a lot more cautious. But with high volume buying and a bull trend, it looks like all three indices are going back on the bull and we're going to see that Santa Claus rally. Jumping over to the Russell 2000, you can see that we did hold that support at 213, but intraday we did break below that level. Overall, that is bearish price action, but we're more than likely still due for a relief rally. So from here, the Russell 2000 is looking bearish, and we did not get the official close below 213, but we did break below that level intraday, and that actually did satisfy a bear count. So right now, the Russell 2000 looks bearish with the highest probability chance that we go back up to close that gap at 228 and possibly even test resistance around 230. If the Russell 2000 gets rejected from any of those resistance levels, that was more than likely just the corrective move and we're going to continue to start impulsing lower. So right now, overall in the long term, you have to remember the Russell 2000 is in a bear trend and more than likely the bears will continue to short it at resistance. So look for resistance at 220, right around 225, and the full gap close at 228. And if we get above that gap close, we should have strong resistance right around 230 to 231. If at any point the Russell 2000 starts breaking back above 232 or 234, it'll instantly start looking a lot more bullish. But take it day by day and remember that it's in a bear trend, so the bears are going to continue to short it at resistance. On a break below 213, you're looking for support around 207 and 205. On the Arkk ETF, we could see that Kathy finally had a green day, going up 2.15% and closing back above 94. We're still below all the moving averages and we're still in a strong bear trend, so there's absolutely no reason to get bearish on the Arkk ETF until we can start breaking back out above 98 and closing back above about 103 to 104. That would be a nice double bottom look, and that could help Arkk get out of this bear trend because we could see price targets around 114 to 119 if we do get a double bottom. But until the price action proves the breakout, don't get bullish because we're in such a strong bear trend and we still could be going down to 85 or possibly even 81. So look for that breakout above about 99 to about 107. And if we can start breaking back above the 50 EMA, which is at 109, we could get rid of the bear trend and we could actually start to form a bull trend. Take it day by day and don't get overly bullish on something that's in a bear market. And the Arkk ETF is definitely still in a bear market. On the VIX, we were down over 11% today, and we did get another bullish breakdown. The VIX is back below 20, which is our bullish count, and as long as the VIX is below 20, we're more than likely seeing new all-time highs in a Santa Claus rally. So the VIX is starting to break down, and the next level I want you to pay attention to is a breakdown below 18. If the VIX can break below 18, that means fear is going away, and we're going to see a sustainable bull rally. If the VIX starts breaking out back above 20, we're still going to see plenty of volatility, and we're more than likely going to continue to see a choppy market. But with the full bull trends returning, it's more likely the choppy market is going away and we're about to see another smooth bull rally. If the VIX starts closing back above 25, get a lot more cautious. But other than that, it looks like the VIX is saying we're going to see that Santa Claus rally. On Bitcoin, we're currently trading up about 1% higher and we're just below 49,000 and we're actually trading back above the 5 EMA. So the Bitcoin's still in a full bear trend and we still need a price action breakout back above 53,000. But it does look like we could have started to form a bottom here right around 46,700. As long as Bitcoin can stay above this support and break back above 53K, I think you can start getting a lot more bullish. If we fail to hold that support level, look for support at 44,000, 42,000, and 39,000, and you can start getting a lot more bullish above 53,000 and 54,500. Remember, if Bitcoin could get back above 60,000, we could still see a brand new all-time high before the end of the year. We'll need to hold this support and we'll need to start forming a bull trend very soon in order for that to occur. On Amazon stock, we had a very strong bounce today, closing back up higher 2.5%, and we did hit that strong support level at 33.11, and that's where we started to see the buyers stepping in. So remember, below 3,400, we were looking for a retest of 33.11, and we did see that price action, and the buyers of the dip stepped in, and we closed all the way back above one of our critical resistance levels at the 50 EMA, which was right around 34.56. So I don't know about you, but that looks like bullish price action to me. So back above the 50 EMA, you can stay bullish on Amazon. This could still be a double bottom. So on a breakout back above the neckline right around 35.30, we could see very impulsive bullish price action and we could see 3,700s yet again. So as long as Amazon is trading above the support trend line right around 34.50, I want you to stay bullish on Amazon because it could be going through another Santa Claus rally and we could be seeing much higher prices in the next couple of weeks. On Tesla stock, we were up 1.82% today and we continue to see our support trend line of support holding up, which is preventing Tesla from closing the gap at 909. So that support level is right around 930 and that is holding up. So as long as that support level is holding up, you're looking for a resistance test at 1,000. If Tesla bulls can break back above 1,000, that will be extremely bullish and you're looking for resistance right around 1065. Above 1065, you're looking for strong resistance around 1145, and above 1145, we're more than likely going to see Tesla going back into another bull market. So as long as Tesla is below 1,000, don't get bullish because we could still close the gap at 909. On a break below support at 900, we could still fill the gap at 843, and on a break back above 1,000, we could be looking a lot more bullish. On Apple stock, we were up 2.85% today, and we're very close to another brand new all-time high. Remember, Apple is in a very strong bull trend, so you don't want to get bearish and try to short it just because it's going higher. At this point, it looks like Apple is trying to get to my next price target, which is just around 188, and that will likely be a very critical resistance level that we'll have to watch very closely. But at this point, you can't deny the very bullish volume because we continue to see Apple going up on high volume. That is extremely bullish, and you never want to try to short something that's going higher on increasing volume. So with this very strong bull trend, look for that price target above right around 188, and your support levels are still 176, 170, the gap close at 168, and the support at 166. As long as we're above support at the 166 level, we're more than likely just going to continue to go higher or form a bull flag from here. So Apple is still looking incredibly bullish. On the financial sector, we were up about 0.25% today, and we're still finding resistance at the 50 EMA, and we're starting to see all the moving averages bunching up. We're about to see a very big move with the highest probability chance to go higher and close that gap above. The industrial sector was up 0.87% today, and we're very close to going back into a bull market. We just need to see the industrials getting back over the 20 simple moving average, and we will regain the full bull trend. So right now, it looks like the industrials are setting up for a very impulsive bull rally. The healthcare sector was up over 2% today, and we continue to see the healthcare sector looking very bullish. This shouldn't be a surprise because we saw the bullish breakout and we saw the strong bullish trend, and we still haven't hit our price target. On the energy sector, we were down about 0.5% today, and we see the energy sector continuing to close below all the moving averages and building up a bear trend. Remember, the energy sector doesn't carry a lot of weight in the S&P 500, so we could see the energy sector going lower while we still see the S&P 500 going higher. So jumping back over the S&P 500, I can't stress it enough that this is a strong macro level bull market, and it's not a bull market that you want to try to call a top in. I see so many of you in the comment section trying to say that we hit a top and we're never going to a new all-time high, and I just can't stress it enough that not even the best in the business can successfully call a top. So why in the world do you think you can do it? Stop trying to be a hero. Nobody cares if you're right or wrong. Just save yourself the money and stop trying to call a top and stay a bull in a bull market. If you're a bull in a bull market, you're going to win 9 times out of 10. If you're going against the trend, you're just going to add a ton of stress and losses that you don't need to acquire. Remember that even a 6-year-old can look at this market and see it's in an uptrend, so don't get outperformed by a 6-year-old. Make it simple and keep it simple, and you're more often than not going to be on the right side of the trade. I also have Bank Trade Alerts, which only trades the ETF TQQQ, and it sends you all of your buy and sell alerts directly via email and text message. That Black Friday deal for 67% off your first month ends this week, so now is the best time to become a bank member and claim that 67% off your first month coupon code. If you're interested in joining Bank Trade Alerts, you can find out how to get the discount and how to join by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.